Hey, what's up? I don't know why I can't get myself on the screen. Never fails.
Technology, man.
Technology.
Hey, in
What?
other news, it's the first day of spring.
It is the first day of spring.
So
It is the first day of
welcome
spring.
to the first day of
Welcome,
spring.
welcome. There we go.
There we go. Hey, look at that.
Hey.
Happy Monday.
What's up? Happy Monday to you. Hey, hustlers. Glad you're here. Welcome to the Monday morning team meeting of the Success Never Rests team. Got Chris Madrid here with us today from Caprock Home Loans. What's up, Chris?
Good morning.
Good morning. Good morning. So we're getting this started off. This is going to be our first live stream of a team meeting for Team Success Never Rest. We've got some different guests today. Got Bart Gurley going to get on here in a little bit. Got Chris Madrid helping me out. Uh, so let's see. Few things we're going to do today. I just want to, first of all, welcome to each and every one of you. If you don't know what Team Success Never Rest, I am Coach O, Michael Oldham. Success Never Rest is a motto, a mantra I've kind of tried to lead by and live by for most likely the last 20 years or so. On your worst day, be good, or excuse me, on your worst day, be good. On your best day, be great, and on every other day, get better. I believe if you're constantly trying to be your best in the moment, you'll be your best in the ultimate moment, which might be the biggest moment of your life. So we're going to little team agenda here, the meeting agenda. We're going to basically introduce a few people, going to make some announcements of what Success Never Rests, the Oldham team, Mavericks Realty Network that we are partnered with, some of the things that we're going to be doing in the next few weeks. Got some industry updates for you. Got a little Monday motivation to get your week started off right, hopefully. Then we're going to jump into let Chris Madrid give us a mortgage market update. We're always interested in what interest rates are doing. They're kind of up and down as we move along right now through spring. We're going to get into some real estate conversation, some video ideas for you that you could use this week in order to start conversations with potential clients or with clients you already have. Some ideas for video, as we know those are the video marketing is becoming huge in our industry. And then we're going to have a little Q&A at the end where you can ask Chris, you can ask myself any questions that you may like. So, Chris, you got anything to add before we get going?
Oh, man, let's go. That's great.
You ready to go? All right. First of all, I'm going to bring Bart Gurley on here, get a quick introduction. Hey, Bart, what's up?
What's up, Mr.
Hey,
Michael? And
Hey.
Chris,
what's
what's
up,
up?
So we got Bart Gurley of the Mavericks Realty Network, Success Never Rests, the Oldham team. We are partnered with the Mavericks Realty Network through EXP. So we work very closely together. So we'll talk a little bit more about that here in a little bit, bring Bart back on. So right now we're going to jump into our team and what we're going to look to be doing. So first of all, I am your host, Michael Oldham. I've been in real estate for about the last 7.5, coming up on 8 years in June. I am the founder of the Oldham team. I was a high school basketball coach. I was a teacher for roughly just over 20 years before getting into real estate. So coaching, leading people. That is my passion, and that's what we're looking to do here. My co-host is going to be Chris Madrid. He's been in the mortgage industry for over 20 years. He's the vice president of mortgage lending for Caprock Home Loans. We've been working with Chris for all 7.5, 8 years of our real estate careers, getting buyers on the right track financially. Then often during this during our monthly or our weekly meetings, we're going to have weekly guests that might be industry leaders in social media marketing, using video, other techniques, could just be lead gen, might be business development ideas, things of that nature. We're going to try to bring you a weekly guest in order to make your experience in real estate and business and life the best it can be. Chris, you got anything to add?
No, yeah, just love being a part. I think a passion of yours and a passion of mine is one to always be learning, right? Because that's a majority of what this industry is. If you're if you're not learning, you're being left behind, because obviously the industry is changing. I think 5 or 10 years ago we heard about video, right? It was kind of one of those things off in the distance. Anyway, not a whole lot of people were on the bandwagon, not on the train of video. And now it has become, right, fast forward 2023, it is every minute of the day, right? It's a big component of, obviously, of our business and of a lot of other businesses. So
yeah, definitely
always be learning.
Always be learning. Video can be lead genning for you while you're sleeping, while you're working with all the lead generation, all the leads that came in while you're working with them. Your lead gen tends to drop off a little bit because you're in the business and you're working with clients. So if you're using video, those videos are constantly running, constantly lead gen for you. So. All right. Let's talk a little bit about some things that are coming up, opportunities for you to get more education, opportunities for you to network with other agents, which is always important. First, I'll say every Tuesday, Amy and I, the Oldham team, Success Never Rests, we host a Tuesday Lunch and Learn, and it's every Tuesday from noon to 1 p.m. That is at the Caddo office, Reimagined in Prosper. And we host it in what's called the Rally Room. When you walk into Caddo Reimagined, you make a left, you go right by the receptionist desk, and right there is the Caddo Room. You'll see us in there. It holds about 25 to 30 people, and we try to pack it out each week. Tomorrow, we do have 50 agents signed up for our course tomorrow. QR code down in the bottom right. If you scan that, that's going to take you to my personal link tree. There, you're going to find links to Eventbrite so you can sign up for these different classes. We host them every single week. I think they have a ton of value, trying to bring you value each and every week. So tomorrow, Tuesday, the 21st, like I said, this class is sold out. So it's not possible to get a ticket to it at the moment, but this class is going to be death and divorce. It's going to be a continuing education opportunity for you. You can get an hour of continuing education credit for attending this class. It's going to be presented by Jason Forgy of Forgy Law Group, and he's going to basically tell us in death and divorce what happens to the real estate, how it gets divided up, and the steps to take in that. So unfortunately, those two things happen. Life happens. So as a real estate agent, if you are the one that knows how to handle that situation the best, it's an opportunity to gain business. Then next Monday, the 27th, just like today at 10 a.m., live stream on the different various social media channels that myself and the Oldham team, Success Never Rest, have. We'll be doing another live stream next Monday, so you can count on this team meeting coming to you each and every Monday morning. Hopefully you'll find it valuable, as that's what we're trying to bring, is a ton of value to you. And then next Tuesday, the 28th, this class is just getting posted, and it is the storm of coming the storm of coming AI, artificial intelligence, and what it means for you. So Chat GPT is just the start of what's going to be coming down the pipeline with artificial intelligence and what it can do. And who I have presenting for this class is someone I have a great amount of respect for. I'll have him on here as a special guest in the next couple of weeks. But Paul Seeley, he's one of the founders of Sandler Partners. Sandler Partners is one of the top Fortune 500 companies right now as far as technology goes. They offer, I believe, over 200 different technologies. And they basically broker it just like a real estate broker brokers the sale of a home. They broker the sale of technology. So Paul stays on the leading edge of what's going on with technology. He's going to bring us a presentation about how this coming technology, not just Chat GPT, but other things, could disrupt our real estate industry, and how we can how can we as agents respond and react to it and use it for, good and those things. You got anything to add on any of those, Chris? You're muted.
I am muted. No. Again, I mean, this is kind of what goes back to what we just talked about. The industry's changing, right? A lot of this new technology is coming in. It's being utilized on a high level. So if you don't know what it is, if you aren't implementing it right in your business, and you're unfortunately gonna get left behind for sure.
Definitely. All right. As I said, tomorrow's class is sold out with Jason. But if you want to scan the QR code here, that'll take you to the Oldham Team Eventbrite page. You can simply follow there, and you will be updated each and every week when a new class is published. Like I said, next week is the Coming AI. It's a class I think is going to definitely be important for agents to be at and to know about.
Yeah.
I have heard some agents, not agents, I've heard speakers talking about how real estate agents, mortgage lenders could slowly be pushed completely out of the industry by technology. So I think it's very important that these two groups of us pay close attention to what's going on. All right, let's get into our industry updates. Here's where I'm going to try to keep you abreast of what's going on, either mortgage, economic wise, in the real estate industry. So over to the right, you can see the title of the article I'm referring to. There's a QR code there. You can scan this, take you to the article, so you can get all the information. I've only got the highlights here for my team. So first of all, most more Americans own their homes. A report came out March 2nd by the National Association of Realtors that more Americans own their homes today, but the gap between black and white home ownership is the biggest it's been in a decade. So even though more Americans are owning homes, that gap between the white home ownership and black home ownership is getting bigger. So the highlights of this is while the U.S. home ownership rate increased to 65.5% in 2021, the rate among black Americans lagged significantly behind at 44%. And I think the key here is it's only increased 0.4% in the last 10 years. So if you are in real estate, you know over the last 10 years, more people have had opportunities to buy than probably any other time in history. And only 0.4% of Black Americans were able to do that during that time. So a big gap. Reasons for that, I've got some videos up on YouTube of what's caused this wealth gap. It's often been unfair lending practices have kept that segment of our society out of the lending institutions. A lot of times it's been home prices have just been more than could be qualified for. And a big part of it is just wages and stagnant wages. Many of the jobs just have not gained, hourly pay like other jobs. So Black Americans and renters are more cost burdened than any other racial group. Less than 10% of Black renters can afford to buy the typical home. So I know it takes most likely government policies and things of this nature to change this story to a more positive one. And, I do know that there are people out there working every day to try to level this playing field. Chris, you got anything you want to add on that?
No, I mean,
in that industry and.
Yeah, I don't know from an industry perspective, right? As long as I've been in it, it seemed like, maybe, I don't know, 18 years ago, the disparate treatment of African Americans, of Hispanics, right, was more prevalent. And I mean, honestly, I feel like in the last 10 or 15 years, we haven't seen it as much from a lending perspective. There are obviously, due to some regulations, fair lending and other things that are out there, does make it. I mean, it does make it difficult, right? But clearly, we've seen some of the bigger. I think, for example, Bank of America not too long ago was they were on the hook for millions, billions of dollars for unfair treatment to the Hispanic community, right? So not to say that it doesn't go on. That's my soapbox of that's why you want to work local, work with someone that is referred to you, because again, at the end of the day, we're here to where I'm at, right? My team, we're here to serve people and serve people well. So getting qualified folks into homes is what we do, right? We're not going to try to burden somebody by overselling them something that they legitimately cannot pay for or something like that. But again, that's the whole purpose of the micro, how we talk about your micro market and just serving well in your local community. So working with having a team, putting those people around you, whether it's trades guys, HVAC, electricians that have the same goals and mindsets, right? From a real estate perspective, if you're building that core group of people around you, and you have as a real estate agent, you have a specific goal in mind of, hey, we're going to serve this community, this demographic, this age group, whatever it is, right? And you have a lender that just wants to maximize profits. Well, those two aren't going to those aren't going to go together, right? So again, as you're building your group, your core of partners and people around you, ultimately just have to make sure that you're on the same page. So
definitely. All right, let's get back. So March 17th, MBS Highway, website that I pay a lot of attention to, they dropped one of their latest reports titled Jobs, Home Prices, and the Fed's Inflation Fight. Excuse me. So the jobs data shows some cracks in the labor sector. And, if you were to open this article up and read that, the cracks that it's going to show is that although unemployment is down, there's still a lot of people out there not looking for jobs, things of that nature. The leisure and hospitality led the way in job gains in the last couple months. I don't think it takes a rocket scientist to figure out that leisure and hospitality generally are some of the lower paying jobs in a community. So even though a lot of jobs are being, created, I'm doing air quotes, are being created, a lot of those jobs aren't paying what needs to be paid to, have a good, strong financial background, or I guess floor or platform to build your wealth on by buying houses and things. Continuing jobless claims match the 14-month high. Home prices are still forecasted to appreciate this year. So we are hearing a bunch about housing crashes and bubbles. And I've had a lot of questions about these banks closing and things and how that's going to affect real estate. And like I said in an earlier meeting today, we have 4 listings on the market. 3 of them were great listings, priced right, and all 3 went under contract basically in 7 to 8 days at over asking price. So the market is still hot. Prices have not are not dropping like crazy. So need to get that out of your head. And then the last thing was the Fed vows to stay the course on its inflation fight. And if you don't know what that means they are going to continually try to raise the interest rate to soften all the buying that seems to be going on out there. So once again, if you will scan this QR code, it will take you straight to that article. This will give you some valuable ammunition when it comes to talking about the current market and what's going on. And everybody's talking about all these layoffs and different things. So this will give you some good ammunition in order to go back to your client base with some quality information. And then the last update, it's titled "Most Realtors Recommend Improving Curb Appeal." And I've had, like I said, 3 listings in the last couple of weeks. And, your curb appeal is very important. The reason I have this on here as an industry update is when I look at this, it says most realtors, 92% suggested sellers improve curb appeal prior to listing a home for sale. And then it says the largest share of those recommended completing an outdoor project before the sale. And most of that was landscaping related projects, whether it was just maintenance at almost 75%, a standard lawn care service, and tree care. So as I'm out there every single day in the market, these are the things I see that most homeowners defer the maintenance on. And it just costs you more later. So I would highly recommend in the spring that you trim your trees up, trim the bottom branches and get them up a little higher. Have someone come in and work your flower beds just one time a year and put some mulch down. And then most people I know have a regular lawn maintenance service that's cutting their yard and those types of things. But all of these things will keep you from having to put more money in when you decide to sell. Then also this article states that 79% cited that outdoor project scopes increased in size before the pandemic. And that's referring to most landscape professionals. About 92% of them found increased demand for contracting outdoor projects during COVID. And then even after, they are saying that, 79% are saying that it was even larger than most of the jobs they had done before. So I think it's very important for homeowners. We encourage our buyers to keep up with deferred maintenance. It's always cheaper to do it as it's happening than to do it later. If you don't have gutters on your house, I highly recommend you install those. That'll help you with your foundation and the structural integrity of your home and those types of things. All right. We're going to move on from industry updates. And a little Monday motivation for you this morning. And I'm going to talk about consistency. We're getting into, I guess, the end of the first quarter, getting ready to go into the second quarter of the year. We all start the year off, I'm sure, guns a-blazing, and we're most likely very consistent with our lead gen. And as the year goes on, we start to get a little busier. the first thing that starts to drop off is our lead gen and, follow up, things of that nature. And we just have to stay consistent. So our Monday motivation today, I'm going to talk just a little bit about consistency. It is a big deal to me coming from the athletic side and coaching. Was constantly talking about consistency, practicing the same way each day with the same intensity and those types of things. In the off season, I used to always say the day will come when winter will ask, what were you doing in the off season? So in basketball, you're referring to when you're going through the spring and the summer and getting into the fall, you don't have actual games. So you are preparing for the games that will come in winter, because that's when basketball season generally runs through the winter and into the very first part of spring. So the day will come when winter will ask, what were you doing in the off season? What does that mean to a realtor? Well, your off season was in December, January, and February, and you should have been consistently lead generating so that when winter comes, you are ready to go. Or when the market dips a little bit, you've been doing active lead gen and you are going to have business because you've been consistent throughout those down times. Winter basically refers to a downturn in the market. It could refer to a downturn in your job, in your health. It could be in your life, God forbid. And you have to prepare for those downturns during the times of no turns. So during the easy times, during the times when things are good, during the that is when you have to be preparing, and you have to be doing it on a consistent basis. Winter for basketball is a basketball season. Well, winter for a real estate agent could be when the market drops by 20%. Winter for you in your personal life could be you have a medical or a health condition that you have to deal with. And the important thing is that you've consistently been the best in all the moments leading up to this moment so that you can be the best there when it's the most important. So at the end of the day, I just like to say to, whether it's agents I'm talking to, whether it's players that I'm coaching, if it's just life coaching, we have to consistently be the best versions of ourselves in every moment so that we can be our best in the toughest moment, which would be the winter of that time period. So, so that we may face in business, the workplace life, or in our health when that day comes. So if you keep a success never rests mindset, you'll be ready to face anything this world may throw at you. So that would be my message to you this Monday. Stay consistent when it gets hard. Stay consistent on your lead gen. Maybe you can't lead gen the way you normally do. Find a new way to do it. Find a different route. I used to always tell my basketball teams, there's more than one way to get somewhere. I coached girls, so using a mall reference was easy. So when I was at Wiley, I would tell them, if you wanted to go over here to Collin Creek Mall, which doesn't even exist anymore, and you were going down 544 and there was a traffic jam, you wouldn't just bang into the back of those cars trying to get to the mall. You would probably find an alternate route, go around the traffic to get there.
Yeah.
And it's the same way with your lead gen. It's the same way with your business. Whenever you get a roadblock, you don't just keep doing the same thing. Sometimes resiliency is changing directions and going a different way. It's not always banging into your problem over and over. So let's move on now and get into our mortgage market update with Chris Madrid from Caprock Home Loans.
Yeah, man.
Going to give us updates on what's going on. So hit us with that, Chris.
Yeah, no, I mean, a couple things to, obviously that everyone's has been talking about since last week is, the banking system, right? Is my money safe? That's I've been hearing this like all last week, all weekend, and a couple of things to consider. The Fed. This is so crazy. Um, it's hard to believe that these guys are the ones that are leading the financial system, and really the Federal Reserve. They have increased the federal funds rate so much, so drastically. Um, the fact that they didn't foresee a potential issue like this with SVB in particular, right, is just beyond me. It is Fed week, so the Federal Reserve will have their, all the Fed presidents all over the U.S. will have time together to discuss the economy and these different things. We know that the Fed will be increasing the federal funds rate by another 0.25%, all right, by 0.25%, getting us somewhere in the range of 4.75 to 5%. Where previously we were, I think, 4.5 to 4.75, something like that. So we'll be going up a quarter. The hope, right? The hope is that they do this last increase for the quarter, and then we kind of wait. The rate hikes that they did all last year, and then even leading it, the beginning of this year, has had a drastic impact on the economy. It just takes a little bit for it to actually kind of come to fruition, right? There's obviously a lag in the data. The CPI report that came out, which is a report that kind of gives us a sign of inflation and where inflation's heading. The one that came out in March was favorable. Inflation has come down, but the housing component, right, which is rent cost, home cost, is still lagging, because obviously homes are still on on the upward end of where home prices have been. Obviously, it costs more now that interest rates are higher. But at the end of the day, as rates start to, or as inflation rather starts to kind of taper off and come down, mortgage rates will come down along with it. So about a week and a half ago, so right before the SVB debacle that happened, interest rates had crept up into the 6 point. So you could actually get 6.99 with 1 point. Par was probably 7.5, 7.6, which was almost back to the levels of where rates were back in November, if you remember, right? So if you go back to our videos from November, I mean, rates were pushing darn near like 8%, 7.7, 7.8, I think is where they were then. So they got back to those levels. SVB happened, and if you know anything about the lending industry, when something like that, when bad stuff happens in the economy, the world economy, all those things are bad for the stock market, so for short-term investments, right? And they're typically good for the bond market, which is your longer-term investments. So yeah, SVB happened that following week. I think we went from being able to offer a 6.99% on a 30-year fixed mortgage down to where we are now, about 6.6. Last week, just super volatile in the market, right? Just a lot of will the deposits be secure? Will they get somewhat of a bailout? Will they not? Right? All those things kind of happened last week, and we'll continue to see that this week as the Fed it's Fed week, so they're doing their thing. But the biggest component right now is if you're looking to purchase a home today, right? So March 20th, you're looking to buy a home, you could lock in about 6.55, 6.6, something like that on a 30-year fixed, with a point, and then up to about 6.8, 6.9 or so with no points. So trending downward, of course, not in a straight line like we've been saying, right? There are going to be some ups and downs, and then just when things happen in the market, it's really difficult to say. The one thing that I do know, we get a lot of our information, like you had mentioned earlier, from MBS Highway. Great supporter. We love MBS Highway, the team there. The CPI report that's going to come out in April, which is for March, so it's replacing numbers from March of last year, is most likely going to be higher, meaning it's going to show inflation ticking up a little bit for the month of March, which will be problematic for mortgage rates. So we may see a slight increase in mortgage rates in April, and then looking ahead, we do still see overall that interest rates will be coming down. So a couple of things that we wanted to touch on, are your deposits secure, right? So you've got several accounts with a smaller, regional bank, I think is the smaller regional banks. The FDIC insures deposits. When I got in banking, 22 years ago, it was up to $100,000, and now it's $250,000. So if you have an account with a local bank and you have more than $250,000, you don't need to be scared, right? SVB, I think 93% of all deposits there ended up getting protected by the FDIC, which is that's not normal, right? So we shouldn't expect that same treatment for the common people, for us, right? But ultimately, if you have $1 million at a smaller bank, you may want to consider just diversifying, right? Maybe you don't need to take out all your money, obviously, but maybe move it over to another smaller bank where you have that $250,000 kind of FDIC protection. This is not the time to go pull all of your money out and throw it under your mattress, right? We don't need to do that. Your money will be insured up to $250,000 per account. So anyway, we'll stop talking about that. Great news, what I feel like from an industry perspective for agents out there, and ultimately customers looking to purchase with a little less competition. Housing starts shot up for the month of February, up to 9.8%. So that's really good. That means builder sentiment is up, right? That means that they feel like, hey, things are definitely moving in the right direction. Building permits, which had been kind of vacillating and kind of been up and down, has had the largest monthly gain in 2 years, now up to 13.8%, right? So again, for homes that are being built, the builders have to go get permits from every city that they're looking to build in, and that is up to 13.8%. So that's the other is obviously we're seeing inventory. You may have lost me for a second. Inventory is up, right? So as interest rates have moved higher, the buyer demand that is there, right? Because the buyer demand is there. It's not going anywhere. It's just become a little bit more expensive because of interest rates. Inventory has also picked up, right? So there's more opportunities, more homes available. But at the end of the day, there is still, there's still several pockets of where it's still pretty difficult to get under contract. We had one recently, right? Customer had been looking for a couple of months, was finally able to get one. Multiple offers. I've had another one where a customer had been looking for 6 months, lost out on 9 other offers. Their 10th one was the charm. So finally got them under contract. But there are specific pockets. There are different areas that are still going for multiple offers over list. So again, you just have to be working with a professional that can pull up comparables and kind of see what homes are selling for. It's not just hey, we can't just throw out a number just to get the offer accepted, right? There is some due diligence that needs to go there. So if you're buying a home, it's a really, really great time to purchase. We're seeing, I think, the biggest, I don't want to say decrease in price, but from an offer perspective, there are deals to be had, right? If you're looking to get a deal, that's all. Oldham, I think last year when we were talking, all we heard was, hey, I want to get a deal. I want to get a deal. Well, opportunity's knocking, right? So now is a really, really good time to get in there before rates get back into the 5% range, which I feel like we could see this year. And if that happens, not if, when that happens, that pent up buyer demand that has been there, it's going to be challenging for buyers that don't have 10, 15, 20% over list to be able to offer, right? So purchase now.
All right. I can speak to that fact as I've got buyers and we've been beat out on a couple multiple offers. We went to an open house Saturday. They had 35 people come through that open house. Of course, they ended up with multiple offers as well. So the market is, not dipping as much as people say, but there are pockets out there. There are properties that you can get your hands on right now that will end up being a great property for you. So, um, let's see. Let's move on to some real estate conversations and video ideas for the week. Real estate is all about conversations. We've been trying to, we've been trying to inform you about different conversations you could have this week with your clients, potential clients, in regards to um, real estate, explaining the baking situation, interest rates, inventory, and those types of things. If you're someone that fears conversations, it's something you're going to have to get over if you're going to be successful in real estate. A book that really helped me was Michael Mayer, The 7 Levels of Communication. This is a great book. Scan the QR code. That'll take you to the Amazon site where you could buy it very quickly. Nice little paperback, but very easy read. It's almost in a story type situation, but it basically can help you go from the relationships you already have to the referrals that you need as an agent. So if you have difficulty with conversations, you don't know really where to start, I would start by getting this book, get into it, and it will get you on your way. Trust me. All right. So 3 real estate conversation and video ideas for the week. Once again, you can scan the QR code to the right. That'll take you to the actual article and information for these. Number one, something that always comes up when we're talking to buyers. So you could use this for your buyers' leads, buyer lead generation, is you may not need as much as you think for your down payment. So I think very good conversation, very good videos to make this week would be about the different options that buyers have with a 3.5%, a 5%, or maybe even a 10% down loan. Most buyers, especially first-time buyers, think they have to have the 20% down. That's not necessarily the case. Of course, you want to have these conversations, then you want to get them in contact with somebody like Chris Madrid, or if you've got your personal lender that you like, you can get them with them. Down at the bottom of this is basically what my thoughts on video conversations and conversations in general. Video plus conversations will equal money. So my second recommendation is back to one of our industry updates. And it's mainly because it's just timely coming into spring. This is a great time to improve curb appeal on your current property. Whether you're planning on selling it or not, it's just a good time of year to be doing some landscape maintenance, whether that's, like I mentioned earlier, trimming up the trees, cleaning out the flower beds, putting down some mulch, things of like that. I might also recommend, if you don't have drip hoses around your home and around your foundation, or if your clients don't, and many of them don't, it could be a great opportunity to make a video about, that can save them thousands of dollars over the next several years if their house was to start having foundation issues that could have been solved by $50 worth of soaker hoses and a couple timers. So something to talk to people about. This could lead to seller leads, because this could bring up, oh yeah, we were thinking about selling and maybe having to do some of these things. What do you think our home may bring? Gives you an opportunity to run some comps for them and then possibly show them a path to sell their current home and maybe get into some new construction or something of that nature. And then lastly, it's going to be very important this week and the next couple of weeks to come to be talking about why the housing market isn't going to crash. I've already, heard chirps in the background referring back to 2008 and things of this nature. And this is not 2008. The banking industry is different. The housing inventory is way different. And just the way things have gone down with these banks failing is different than what happened in 2008. So I think it's very important that we are having conversations with our clients, our community, those people around us, because they are hearing from, as they roll through their social media, they're hearing from 2, 3, 4, 5 different people about how the economy is crashing. We're in a housing bubble. All of these things, mainly to get clicks so that they can get paid through their optimization of their videos. Anyway, I think it's very important that we make truthful videos about how come the market is most likely not going to crash because of the conditions that we see today versus the conditions we had in 2008. So those will be the conversations, the videos that I personally will be having this week, making this week. I would highly encourage any of you out there to look into doing the same. Chris and Bart, you guys got any ideas on these?
Go ahead, Bart.
You unmute, Bart. I've tried.
There you go.
Oh, sorry, Chris. I was telling you the same thing.
Yeah, I mean, I think two important things, right, are back in the early 2000s. The no income, no asset loan was very prevalent in the industry. Stated income, stated assets, very prevalent. Fast and easy, very prevalent, right? These were all very streamlined loan programs, right? Minimal verification, super streamlined. Fast forward to now, right? And really even like 2014, I think was when a big change came out from a mortgage industry perspective, and that just doesn't happen anymore. There are so right now there are like bank statement programs, different non-traditional financing options that are out there and available, but there's still a verification component that has to happen, right? It's not just I'm gonna turn my head and pretend I didn't see. You've got $0 in your bank account and you make less than $50,000 a year trying to buy $1 million house, right? That is not happening. So we are having to, like, in some case, in my opinion, right, there's some instances where we are over verifying. It's a full shakedown, pat down. It's a financial. Gosh, someone said one time, this feels like a financial. Daggone it, the word has left me.
Assault?
Well, no. There's a procedure that's done anyway. Whatever. It's probably not appropriate for the show.
Colonoscopy?
It's maybe. No, but I mean, again, we are checking credit reports, every single thing on your credit report, aliases, addresses that show up. There's back end systems that would pull, data in the state that you're purchasing in to make sure what you've stated on the application that you don't own any other real estate is verified, right, through a third party system. So there's checks and balances all over the place where a crisis like 2007, 2008 is going to be prevented from a lending perspective, right? So I don't think we'll ever see that again. And not only that, right? Right now, I think the on average, most people have 40 plus. Oldham, you and I've talked about this, 40+% equity in their homes, right? So even if let's say the the job situation gets a little bit tough, unemployment starts to go up crazy, um, most people could potentially sell, cash out their equity, and then be able to kind of get back on their feet from that perspective, right? We're not going to see the slew and onslaught of short sales and foreclosures that we did. So there's just a lot of, man, I really wish people would get their source of information from other outlets other than CBS and NBC, all these other these places that, in my opinion, tell it's like a half truth, right? No, I'm not trying to bash anybody, but
Yeah.
from what I see, it's just a half truth, right? So if you're relying on one specific source to get all of your news or all of your information, it's going to be biased, right? Whichever direction you lean, right? And we're not talking politics or anything like that. I'm just saying it's going to lean one way or the other. So you just have to kind of get out of your normal bubble of where you get your information from, and kind of look at all of it, right? And there's going to be bits and pieces of truth, wherever you look, and ultimately the data's there, right? So if you dig into the numbers, this is the information, you can pull it up, right? You can pull up what inventory was available back in 2008 versus now. You can pull up lending criteria then versus now, right? So all the information's out there if people just took the time to look and not took the easy route of just, I'm going to see what this news station's saying, whatever.
Yeah. Bart, you got anything to add?
Yeah, I just want to circle back to one thing Chris talked about, which is, this inflation that we're trying to get a hold of is, and the jobs numbers you were kind of alluding to, low unemployment. Well, it doesn't speak to the fact that may be because people have 3 different jobs to make their bills paid, right? Just their basic overhead covered. And so this inflation is going to be most painful for that sector of the population, but it's only because we haven't dealt with it, and it's only going to get worse if we don't, right? The Fed has just delayed this policy of easy money, right, for 12 years, and it will temporarily affect those that are most vulnerable. But a lot of those people are not homeowners anyway. They shouldn't be homeowners at this point. They can be, right? But I think we're going to get the environment back to where they can have that benefit of home ownership if they choose. It's just going to be, over the next year or two, probably, we're going to see this be initially a little painful for a long-term, more stable economic environment. And I think here locally in Dallas, we have so many people that relocated here over the last 3 years because of, the access to opportunity, less impact from COVID as far as your business goes, and generally just a little more freedom. And those people are on the sidelines that were homeowners where they came from. They know the financial benefits of owning here. They're just getting acclimated to the market. And then you throw high rates, low inventory into the thing, and they just want to feel confident. And that's our job, is to let them hear the data, make good financial educated decisions with somebody that's familiar with the local market. Those demands, and inventory is high a little bit right now, probably 3 to 4 months, depending on where you're looking exactly. But all it takes is these rates to fall, these buyers to get comfortable making the decisions that are in apartments that are great credit, great income. They're here, and that's going to be a perfect storm to create, again, another situation where there's inventory issues and high prices. So you like Chris said, you have 2 different sides, and all this data you kind of have to mesh together and see how that might impact us overall, which I think here locally we're going to be pretty insulated, very safe to buy. So anyway, that's my 2 cents.
Yeah, I'd have to agree. And being like I was talking, not maybe during this meeting, but on the meeting before this one, is I'm out there in the market with buyers and with listings, in the last couple of weeks. And it's very 2017, 18-ish. It's not the 20, 21, 22 frenzy, but it's still on my 3 listings. Every one of them's been over ask, multiple offers, and tons of showings. So if houses are priced right, they're in good condition, they're going to sell. There's a great market for them right now. There's tons of buyers out there. Went to an open house Saturday, 35 people had been through it. So anyway, All right,
Yep.
that gets us to our Q&A. I don't believe we really have any Q&A today. So I do want to pull Bart up and let's talk just a little real quick about our relationship with Success Never Rests and the Oldham team. We are partnered with Maverick Realty Network, which Bart is the founder of. We're partnered together basically to help agents get where they want to get, whether that's from 0 to 12 or from 12 to 24 or 24 to 48. But Bart, let's talk a little bit about, about that relationship and what it looks like.
Absolutely. Yeah, we're both, I think we have totally aligned goals is to help agents, find their path in this industry, regardless of where they find themselves today with regard to past experience, sales, brokerage. It really doesn't matter. We're looking to help agents like find their tribe, so to speak, and deliver valuable information. I know you've been in it a long time in this industry. Have experiences from previous industries that benefit you greatly here, and then just not related to real estate, just general life experience, right? That you invest in these networks that you have, and then my group has. So it's a perfect combination of really investing in people and attracting those that are really looking to grow and improve their situation overall. And if we can do that, I think we both bring a lot of experience and tools to the table, as well as just a plethora of live events where we're bringing guests in. Yeah. And these are people that you and I benefit from, right? That proximity to being around people that are doing things that you want to do. And I think just getting off the snide and deciding it's time. I think we actually are poised in our industry for we've talked about it before, but many agents are going to be eliminated from the business with this environment we find ourselves in. Sales are hard to come by for the majority of agents out there. And I think it's going to be a really important time this next year and a half to stay in the business and make sure you're doing the foundational elements that you and I have practiced our whole careers, but the last 2.5, 3 years, you really haven't had to call on these strategies.
Yeah.
And it's going to get real really fast for a lot of agents this next 6 months.
Definitely. All right. So Bart and I, basically, we're in a network of agents. There's about 30 to 40 of us now. There's going to be 200 up to 1,000 in the future. But as Bart said, we're all like-minded. We're all trying to, figure out how to conquer real estate as it changes, as it evolves. And like he said, we both have a plethora of experience in other areas, also in real estate. So we feel totally poised to help any and all get over the hump, help you at whatever stage you're at. So appreciate you coming on, Bart. And we're going to start looking to sign off for today. Appreciate you guys joining next week at the same time, 10 a.m. Once again, you can scan this QR code. That'll take you to my personal link tree where you can get links to my social media, Success Never Rests social media, YouTube channels, get access to our Eventbrite page so you can sign up for our Tuesday classes. They are great. They're getting better and better. As Bart said, we are both hosting live events pretty much weekly around the DFW area. We are interested in coaching and helping any and all agents, regardless of your broker. We are here to assist you in what you need. If you need something more than this weekly call, get on my calendar. We can have a quick consult, a quick visit. Maybe see if there's any way that I can help you get on the right track. So remember, on your worst day, be good. On your best day, be great. Every other day, get better. If you do those things, you're going to be successful. No doubt about that. Chris, you got anything follow up with before we jump off of here?
No, I mean, the biggest thing is wealth is created in real estate, right? No one here, I can speak for the three of us. It's not a sales pitch. It's not we want to get a commission, right? I mean, this is essentially real estate is one of the safest ways to build wealth. And again, we want to make sure that everyone has the opportunity to be able to do so. So that's, we get on some of the other stuff we post, we get hammered by comments of like, oh, these mortgage guys and these real estate agents, don't trust any of them. And hey, legitimately, we do business here in the local community. I'm happy to say that when I see my clients at the grocery store, pumping gas, they are genuinely happy to see me, right? Which means that we didn't lie to them, we didn't sell them a bill of goods, we didn't do any of that stuff. Which it's the same for you guys as well. So
Yeah.
those are the biggest. Yeah, those are the biggest thing. It's just that is so funny seeing these keyboard. What do they call them? Keyboard warriors.
We got ripped. We got ripped
Oh
on
my
we got
gosh.
ripped on our video, but I just kept commenting back, just keep that video going. Every
No,
time they
it's
comment, it just pushes it out to more. So
yeah, and I'm happy to take any of those phone calls, right? If you have questions about any of the information that we shared, I'm happy to walk through it with you. Give me a call. My number is 214-734-1531. Y'all give me a call.
all right, Bart, you got anything to add before we sign off?
No, thank you very much for having me on. Love doing this with you guys, and wish everybody a great week. And if I can help in any way, just let me know.
All right, Success Never Rests Clan. Have a good week.
See you guys.
Reach out if you got any questions. Obviously, you can get in touch with me on all these different Facebooks, YouTubes, Instagrams, you name it. I'm trying to be out there and available to you, whether you're a client, you're an agent, you're a basketball player, you're a coach, whatever you need, I'll try to help. All right, everybody have a great week. We'll see everyone next week at 10 a.m. Peace out.